Hope all you guys can hear me very well. Thanks for coming on this Sunday. And today's topic is about recognizing sell signals. And this actually is a very important topic for all the investors and traders. People get clarifications and guidelines from others and themselves to when to enter. When everything is moving or some stock gives a good signal or buy signal, people just jump into it and normally have positions, or some people are very long-term holders, so they carry their positions for long terms, but they really don't know when to sell it. And this is where most people get it wrong. Either they sell it too earlier, or sometimes they get stuck when it's timely. When is the time to get out of the stock? Normally they don't. And I always, all the time, I get queries from people. Hey, I have this, I bought at this much has loss has been incurred. When is the time? What should I do? Should I just hold it and wait for the price to improve? So this skill set is absolutely important to understand when there's time to get out, or at least reduce your exposure. Because sometimes stocks can be brutal, market could be brutal, and they can really eat away all of your lunch and all of the profits you have earned for maybe past many months or years. So without wasting any time, let's jump into it. So we make buy decisions with fundamentals and technicals. We look at the company's fundamentals, the stocks, business, market, competition, products, their niche, their moats, their strengths and weaknesses, and we buy from technicals as well when the stocks are coming out of strong basis, on the basis of some indicators like my own proprietary trend recognition TR indicator. And we sell decisions 95% of the time with technicals alone, not with the fundamentals. 5% time maybe fundamentals, 95% time technical. And why? It depends upon your horizon. Most of us are kind of people who do not want to see losses and who are there to trade it rather than holding for years, not long-term investors. So for those, technicals provide a better set of tools to make sell decisions timely and efficiently. So before we move on, let me show this disclaimer that the material presented here is for our combined education and learning purposes only and should not be taken as a purchase or sell recommendations. Trading, investing in stocks and derivatives, futures and options especially, is risky. I should have added cryptos as well, and could result in a substantial loss of invested capital. I'm not a registered financial advisor with FINRA or SEC, and for any financial advice, please consult to a registered financial advisor. And what it means that if you want to discuss your financial investments, your personal financial portfolio, that what price you should buy, what exact price of how many then you of a particular stock you should sell, then I'm not the right person. I'm not authorized to do that, and you need to consult a licensed financial advisor for that purpose. So the foundation is the core sell signals. So from my experience and from my learning from others as well over the years, the core sell signals which I have identified, they basically fall into four different categories. Number one is extension and climax stock. That some stock has been stretched so far from a shorter term moving average in one way up or the down that it seems natural that it will come back and it will normalize. Another one is the break of key moving averages. So in our case, what are the key moving averages? If you are mostly working on a swing or medium short-term trading, then the key moving averages are 20-day line or 50-day line moving averages. In my case, I normally opt for EMA, exponential moving average, which is different from SMA, which is simple moving average. And the reason is the exponential moving average give more weightage to the latest price action. So for example, if you have a 200-day or 50-day line, the SMA will give each equal weight for the price of each day. EMA, on the other hand, give will higher weight to the latest price action. Past 1 week or past 1 or 2, 3 days, they will get more weightage compared to the 50 days old price levels. Those will get less weight when it comes to calculating the moving average. So there will always be a slight difference, but for our trading style, where we want to have quick profits or quick gains most of the time, EMA suit us better. Another signal is the prior day's low or breakout violated. So let's say a stock has made a breakout move. It has come out of a base, which is also known as a pivot point in terms of IBD terminology. And then it fallbacks to previous day's low or even below it. If the breakout fails, then it's time to either scale back, lessen your position, or completely close out the position. Another sell signal is that normally when the stock has broken out, it works in a channel and the price move within a channel. And when the channel is violated and is broken, it gives you those kind of signals. And that's the time for stock either to reverse its direction or start a consolidation periods. So we will see examples of all these types of sell signals and how to recognize those sell signals on timely basis and then act accordingly. So moving on, for example, a stock is doing very well, and we see some charts as well. But what are the signs of weakness we should be looking for? We should look for volume and price divergences that signal large investors selling. That maybe the price is slowly increasing, but there's large volumes on selling days. Means the large investors and the big guys, they cannot sell huge amount of their positions overnight or in one order. They normally spread it over a period of few days or maybe sometime few weeks. And that gives us price and volume divergences. And those are not the direct signal, those are underlying signals. So it's our job as investors and traders to understand those signals and at least realize that what the major players are doing. And as individual and small retail investors, we cannot fight with them. So we cannot fight the trend, in other words. So we notice as a sign of weakness, we can notice a heavy daily volume without any further upside. We can also notice that the new high has been made, but the volume has declined significantly or noticeably. Now, stock rises in bases. When it has a long base, normally it's a first stage base, but it keeps on adding bases. It goes on, then creates a smaller base, then goes on, create another smaller base. So the more the basis stock encounters, the reward to risk ratio starts diminishing. And then eventually, a time comes when every stock, for some time or for a longer or extended period of time, changes its course or starts giving its profits back. Another important concept is PPO divergence while pricing. PPO stands for percent price oscillator, is a modified form of very popular MACD indicator, which most of you probably know. If you don't know, you can always Google it, and we will see an example from Snowflakes, a very recent example. Snowflakes is a software maker. And then we can also see that its relative strength line starts lagging. Relative strength line means that its RSI, relative strong index, which is basically a measure of stock's own relative strength against its own price action, and also against its peers, the broader industry groups. It starts lagging, falling down. We will see some visual examples. Faulty base structure, bases are not clear, not a very good tight base or a cup with handle base, very choppy base, and hard to understand where the direction is going. Or eventually, even if it comes out, then the faulty base structure is more inclined or prone towards a collapse going forward. And another signs of weakness is stocks continues to trade below the 50-day moving average EMA. And this is also a key thing. When a stock starts trading below the 50-day EMA means it's showing weakness. A strong stock should trade above its 50-day. Now, it does not EMA. It does not mean that even the strong stock cannot come below the 50-day EMA. It can, but normally those durations are very short-lived. And very soon you will find the stocks coming back and going back above this particular line. And the reason being, there are many individual investors and traders who are waiting for the stocks to come down to some lower levels, and they buy those stocks on pullbacks. So those are the sign of uh, weaknesses. Question is from Alvin. What about the candlestick? Like we get a red engulfing candle after bull run. That's definitely a sign of weak. It's not a weakness. In fact, it's a sell signal, and it was here actually here. Extension climax top. You will see it over here. This particular sell signal. So these are the sign of the weakness which I was talking about, and these are the actual sell signals. Going back to the previous slide. So moving on, so let's see. This example is snow. I mentioned snow, and people. So this particular chart actually shows quite a few signs of weaknesses. So when we, I hope you can see my cursor. If not, then let me change it to laser pointer right here. So snow was a very good stock, going up, made all-time new highs in late October. Then all of a sudden, its character starts changing. So this is its own relative strength line is started coming down and never made a new high. Anyway, this could be a very short-term signal, so we can ignore for a very few days. But over here, it breached this 20-day line. This is the first signal, and then it tried to come back. Now this is the PPO line. You see, it is going up. Now, when it came down, it again tried to consolidate, move up, but there is a PPO divergence. And the PPO's main line, the black line, starts falling below its moving average, which is the red line. And when it happens, it means that this is a divergence. If the price is going high, but this is going down, and it simply means that going forward, if it does not stabilize, there are higher chances of going to the zero level and reset there. These are, Faisal, all these are EMAs in my case. And 90% of the time I work with the EMA. SMA is mostly for the long-term investors. Okay. So when the people starts falling down, these are our signals that it's this now is starting showing weakness. And when now is it done? Not yet. But it reached the 50-day line right here. And this is our first, or maybe the second. First was the 20-day, this is maybe the second one. But let's say you have conviction in the stock. You have been holding it for a long time and it came all the way from 188 or maybe 68, and you still want to see the price action. The stock again tried to move up, and then again it fell overwhelmingly with a gap down on this increased volume. So this is what I meant by increased volume, the red bar. And it breached the 50-day line again. Now it means that the situation has changed as far as this particular stock is concerned. If it is not too late for you and you already have good profits or you entered here, then maybe you can take a small loss. But do not let this loss become catastrophic in your case or substantially increase. Just try to reduce your position, or maybe to me that is a completely sell signal. This gap down on high volume, breaching the 50-day line, not the first time, second time. I would have exited or closed this position right here, because this is a software stock. This is a high beta stock. And when the software stocks and the high beta stocks starts moving like this, they can easily swing 30-40% lower in any case. So every time now it is fine trying to find support. When it comes to this 200-day EMA, that's the next level of support. It again tried to come back, did not succeed. Again came back, then again tried to move. Now every time when the direction of these lines is going downward, is pointing downward, 50-day or 20-day, this means the stock will have resistance overhead. Whenever it come to this level, again find the resistance. So it again found the resistance here. Then it again fell and breached that 200-day line. But
ये मस्जिद के ही हैं साहब ही
um, you have a question? I'm sorry. So every time when it is trying to show this behavior, you would likely find the same behavior. When the situation will change, when your PPO becomes like this, it again crosses this, and its slope is rising upward, and it crosses zero line. But the PPO is continuously moving, drifting lower and lower and lower and lower, which is telling you that the stock is becoming weaker and weaker and weaker. Got it? Now, these are the signs of weakness. The first sell signal was here, second was here. I would have closed this position right here or right here. I would not wait for the 200-day line or coming back. If I'm stuck here, then I would wait. Okay, let's see what's the first reaction here. Normally, the stocks will find as a first reaction some support at the 200-day line, like it did here. They tried, and it went back all the way to this 50-day line again, which is now acting as a resistance. And this is my time to get out. So all these people, you see this heavy red bar, rabbit candle, those are the traders who have been stuck here for some reason, and they wanted a better place to get out. And this is what they did. Again, they got out, they sold, and the stock again further drifted downwards. So same situation is happening and happening. But why it is happening, just know, it's just pure technical or it is something else. Question, what is the pink line at the top level? This line is a Bollinger Band, upper Bollinger Band or the lower Bollinger Band. Okay, these are the technical indicators. And when the Bollinger Band expands, it means the stock, like this is expanding downward. It means the stock is seeing a heavy momentum going downwards. And when Bollinger Band is here and expanding, it means the stock is having good momentum going upward. So going back to this particular uh, stock again, and I have this snow chart, the same chart, which was on my presentation. Now, this was one indicator, one breach of moving averages, high volume. Prior to that, try to move to the higher side, but look at the when it was moving on the higher side, the volume was very low. And look, when it's coming down, the volume is very high. Another signal. The PPO divergence right here, and then the PPO coming to the negative side and becoming weaker and weaker is again a sell signal. If we move down, we can see this relative strength versus its peer. So this is DJUSSW is the software group, Dow Jones software group, and Snow is a component along with many others. And look what Snow was doing against this software group. As a price, it's getting weaker and weaker against the software group itself. What does it tell us? It simply tells us that Snow is out of favor within the group, and within the group, this is not a software maker whether people want to be. So, and this is its performance against the broader index, drifting down and downwards. And within the not only and the group itself as a whole is also getting weaker and weaker. It means the group itself is not supporting. Now, if you even have a strong group, that group sometimes can provide support because all the same kind of stocks normally they support each other. Like these days, the Western Digitals, STX, Seagate, Sandy, they are all Micron, they are all supporting each other. If one gets stronger, other will also get stronger. But if the entire group is weak, then there is nothing left in the group which can help and support this particular stock, especially when the stock itself is weaker within its own group. So nothing is there, and there is no point in remaining. If you just waiting here below this 200-day line, you got stuck, then you're just waiting for, I would say, catastrophic disaster, because ultimately you lost 50% from 210 to 120, or maybe 40-45% just from here to here. And in fact, you started from here when it was time to get out on timely basis, they probably you have lost more than 50 or 60%. And you don't want to get stuck in a position, right? We don't want that. At the most, when we take a position, our target is to have a stop loss level 8 to 10%, not more than that. And in this, and when we have good profits here, let's say we have profit of 15, 20%, we want to secure those profits and we will not let this stock from a winning position to a losing position. So that has a 15%, 20% gain, and then it went back to 60 or 50% loss. That's not something. That's a killer when it comes for your emotional and psychological capital, plus your financial capital as well. And we do not want that. So that's why it's very important to understand this very key concept that what are these PPO divergences are there? What are the faulty base structure? Question with Zishan, the similar case happening to cyber stocks now, other cyber stocks are not in the support. Exactly. Exactly. You name any cyber, because the entire stock group, which is this, has been weak for months and has lost of almost 30-40%. Even the stock like Microsoft, which is normally a long-term stock. But that has also come down. So that's a problem. Any cyber CrowdStrike, for example, cybersecurity. Okay, let's check CrowdStrike. Same phenomena. PPO coming down. At it started trying up. PPO was, you see, PPO was coming down when it was trying to move up. That's the PPO divergence. And once the PPO falls back, its average, it was gone. This was the first signal. This was the second signal. Second here, maybe this may be the third signal. Now, stocks normally, when they come from a strong trend and change their course of action towards a falling trend, they give multiple signals because not a single attempt or single signal is successful. So, if we are smart enough, then we should catch those signals in the initial stages to avoid those catastrophic losses. So, again, the group was same, remember, but this particular stock within that group was stronger. So that's why it has come a lot compared to snow from 350 to 450 something. Within the group, it is showing strength. But overall, the group itself, this is the same chart, is very weak. So I hope this concept is clear. So how to catch this, understand the weakness and how to identify the sell signal and timely get out of stock before it can really hurt your capital. So going back to our presentation, and this particular snow example, actually, it help explain this all most of these points. Lagging relative strength, continues to trade below the 50-day, PPO divergence, new high made on declining volume, and highly daily volume without further upside. Now, I think it explained quite a few of these points. So, apart from that, we should also grade our stocks. So, some stocks are better than others. Like we have a long-term list, the leaders. We should hold the leaders if we have conviction in them. But here the fundamental theory and the past performance also comes into play. So we should recognize which are the highest quality names earning the right to be held, rather than just closing the doors and getting out of, just like in the out of the portfolio, just like in case of Snowflake. The leader should show strong relative strength and clean chart structure. We'll come to that with an example. What is a clean chart and what is a strong relative strength? I think I explained the relative strength compared to the group and compared to the industry, overall broad index. The leaders, we should have a cushion of 10-20% from our entry. The more margin we have, the more room we can give our leaders to fall back, even during the bad times or the correction times. Give them room even on red days. On the other hand, cut the laggards like Snowflake. Lower quality names go first under pressure. So when the pressure came, those are the first ones who started going down. Their relative strength is weak or broken structure, just like we saw in Snowflake. Stocks at or near break even or add nothing. So if you have just entered and stocks is taking a negative direction and your loss is 8-10%, don't wait for the loss to become 15-20%. Get out before it gets worse. So you can free up your capital for fresh leadership. Maybe the capital is rotating and maybe you will find some good opportunities in some of the areas of the like when the software were breaking down, chips were strong and energy came back strongly. So they were the leadership in other areas of the market. So if we cut the laggards, we can focus towards the leaders. And how do we identify the leaders? By taking a look at their relative strength against the industry, against their industry groups, like in case of Snowflakes for Dow Jones Software Group, and the broader index itself. Okay. So here is another example, and this is a trading view. Since you know that I have developed this trading view TR indicator, and I like because the trading view gives a professional trading and charting platform. Now this is a leader, which is Apple, and Apple, and this is a monthly chart by the way. Why monthly? Because we are looking at a leader, a high quality name, which has earned the right to be held, which has gone through very difficult time. At times, had given us some losses, but it always comes back strong. Now, do you see any red people who know about the TR indicator? This is a strong buy zone, and this is neutral zone. But do you see any strong sell zone here, except for the first stage? This is the first stage sell signal. Now, you don't see any red zone here. What it means that it's very difficult for this particular leader to go into a very strong selling spree. And since 2017 and 2026, almost 9, 10 years, what do you see on this chart? Even when there is a period of consolidation or losses come, let's see, I was long here and or I started position my now my concept is to entry is that whenever the green zone starts coming out of a base after the first, then we should take position. So I took a position here with the 8% loss, and this is a monthly bar, very long term. So it moves on, and I'm here, and it started doing this. Now I can recognize that okay, if I'm a short-term trader, then maybe it's time for me to get out. But there are people who are there for a very long haul. They want to be there for 1 year, 2 year, 3 year, 5 years down the road. For them, this is one of the best stocks. Because we know from this last 10 years history that whenever it goes through this period, now this was the entire market was in a bear market. It came down something 20 to 30%, 2022 and 2023. When the market improved, came out of the bear market, then again it took its direction back. And when last year, when suddenly everything starts falling down because of the tariff things and other stuff going on, it took a dive down. Maybe it's time when it's breached this 20 period, not in this case, it's 20 months. So you save your capital, but you already have a high cushion. For example, if you entered here at 70 or 130 or whatever, then you are at this position very well off. You can sustain a loss of even 20, 30% because you have that cushion. But what about a trader investor who has just entered here? He or she does not have that cushion. So you should not take more than 8 to 10% in that scenario. Mara is a very highly risky stock. Mara is about Bitcoin. It's not a long-term stock. We'll take a look at that Mara, and the question was about Microsoft. Okay, if time allows, we'll take a look right here. Now, again, it came out last year and then it revived its uptrend. So when it comes to a leader like Apple, even if you go through this cycle and if you have a good cushion, you can sustain that move. Because taking a longer term view, you can still see that overall this stock is still in a long term trend. Okay. Red signals are short-term leaves. Red signals are the red bars, and this is the first stage red signal on the monthly chart. So let me very quickly go to this. This is Apple chart. One question was about Microsoft. Okay, let's choose Microsoft. Now the Microsoft on the monthly chart is still a good leader, but it has come down significantly. So it depends whether you want to be there, want to incur a loss, or can you sustain 30, 40% loss? Now, if you change the duration, even on the to daily or weekly, you will see a different scenario. You will see that for the week starting from October last year, this is a sell signal for Microsoft on the weekly chart because it breached this important line. So for me, for the long-term leader, if it breaches an important line on a weekly chart, I normally take out because I don't know where it will stop, and Microsoft has not stopped yet. It's only very recently here when we gave position, we thought that it had enough and it's time to recover. It's trying to recover, but it is still under the weather and it has not recovered significantly. Now, Microsoft, in other words, does not compare to Apple or for that matter, Nvidia to classify itself as a long term leader. And the question was Mara. Now, Mara is nowhere is a leader. Do you see it's a leader stock? I showed you an example of Apple, which is all green, all going up. Now, this is Mara, monthly chart. In other words, it's not a leader, it's simply a loser. It can be a very short term trade because it moves significantly when the Bitcoin moves. That's it. So it's not a long term leader. Okay. So moving back to our presentation, we cannot discuss every stock in a very short period of time. I will. Nvidia is a long term leader, and the why? Let's see why. This is monthly chart for Nvidia. Do you see any red zone here? No. But Nvidia has come up for the last 10, 11 years significantly from split adjusted $10 price to 200, which is 20 times price in 6 or 8 years. And even when it comes, its behavior shows us that it has a tendency to go back because there are people who are always waiting to buy Nvidia and support Nvidia at lower levels. It again touched new high, came back. But as long as it is maintaining this 164 or 118, as a long-term investor in Nvidia, I'm not worried. I said, okay, fine. Let it come back, find some new buy investor, and it starts moving again. And hopefully it will come. Unless the market changes and the entire markets come into a correction mode, then the situation can Nvidia turn bad as well. Okay. Another question was AMD. Let's very quickly go through the AMD. This is AMD. Now this AMD is a monthly chart. So AMD is a different picture. At time it goes into a period of long consolidation and pullback, which is sometime 165 to 60, almost a year during this case, which is more than 50%. Now I simply do not want to carry a stock which gives me a 50% pullback. I would rather get out at this position, not more than in any case 20-25 loss from the peak, and then wait for a better entry like something here. Why should I get myself stuck in a stock like this for 6 or 7 or 8 months when it's doing nothing instead of falling, just falling? Just like it did into 2024, it came from 222 all the way to 100. Now, right now, it is showing a climax top situation. It's gone all the way to very quickly, too far, too quickly. Okay, so our main topic is not to discuss the buy point and other. Our main topic is to identify the sell signals and the weakness points. So, why we are discussing Apple and Nvidia to understand how the leaders show their behavior compared to the laggard. So, Mara was a laggard. Mara is not comparable to uh, a stock like Nvidia or Apple, and for that matter, Google these days. And it can give you some short-term moves, very quick move, and that's fine. That's the behavior of the stock. So we have to grade our stocks, and I have many more customers who are long-term holder, and they don't want to get into all. They don't have time for this. They have day jobs, business, and they have other things to take care of for their family, and they don't want to get stuck into these kind of things. So that's why for them, identifying the leaders and holding them is important. Okay. I gave an example of Apple. So this comes to our risk management. When we are very close to our break-even level, within 3%, then there is no buffer left. And the stocks falls from, let's say, 10, 15. First of all, as a principle, if a stock gives you 10 to 15% gain do not allow the stock to go back and start giving you losses. Period. When it gives you 10 to 15% profit, move your stop loss to break-even level. That will help you psychologically. And now let's say this comes down and you have left with only 3%, so there is no buffer. You are vulnerable. You might consider trimming your position or exiting before a report. A report is around the corner, earning announcement. You don't want to get stuck in that report. If you have a 10% cushion, then you have some working margin. You can hold it, or you can sell some and hold a partial position. If you have 30%, then you have a strong cushion. You can hold through the volatility. You can let the leader run. You can even, if you have enough stomach and enough deep pockets, then you can even wait for maybe you can give a room for 10-15%. But under no circumstances, you should allow any of the your gainer, which is 10 to 15%, to move back and give you a loss. That should be how to protect your cushion or how to protect your risk management. So another one is the buy point day low strategy. That you have a buy point identified and you bought there. Generally, the buy point is the breaking point coming out of a base. At that point, you give an 8 to 10% below your enterprise your stop loss. Now, the stocks actually moves in the reverse direction. It fails. The breakout fails, and it just came down to the buy point again. So you should start selling and sell some 25 to 50% of your position. And then it further went down and closed below the day before buy point low. Then you should sell the rest of the position. And if it comes below the 8% of the purchase price, then you should completely close that position. So let's give an example here first. I will give you this example. Okay, this is POET, P-O-E-T. I hope you can see it very clearly. I know the color maybe is a bit off. So this was the first buy point in last year, October. And it broke out from this kind of a cup formation, broke out here, but it came down here. So this you should be your first line of defense, and you should uh, decrease your position. But stop does not stop here. It tried to move back and then breach this moving averages line again, a fall here, and this is a strong sell zone started. Now you should get out of complete of your position. Do not wait for 8 to 10%, and you should complete the exit point right here at this point. The same stock poet give you another entry when it broke out from this previous buy point and this TR chart, but again fall back right here. On this particular day, when it fall back and this high volume, you should get out of. You should not wait for 8 to 10%. Right? You should not wait for that it go down and come back again. It might take weeks or months. In this case, it took months to get back to that position, and you can better utilize your capital. So what was the question? Trimming at 3%, what time period with market volatility? Everything is moving almost 5-10% in the same day. I think the question was about this thing, 3% buffer. What it tells you that generally you do not have any buffer when you have 3% cushion. Now you decide what stop loss you should be working for. My recommendation is you should not allow any position to go back in general more than 8 to 10% stop loss in any circumstances. There are some exceptions, like in case of long-term leaders, where you have conviction in the stocks that even if it's come down 10%, the history tells us and the strong product line tells us that when the business conditions will improve, it will fight back. And this is true for stocks like Google, Nvidia, and Apple, these kind of stocks. So this is where all I'm saying is that at this position, you do not have any buffer. You should be cautious of getting out. And in these positions, you have a strong buffer, but do not let in any condition to stock with a 10 to 15% of profit to turn into a loser. That was the key point. Okay. Here is another example. This is ADM, Archer Daniels Midland, and this is 2019 stocks. Now it This was a tight base. It made a breakout here from this 51.11 point, and chances were there it would kept going on. But just after the 2 days, it fell back and with this strong volume and passed through this pivot point. So when it crossed this pivot point, this is the pivot point or the buy point. When it crossed this here, this time you should, if you're not completely selling it, then you should reduce your position size by 25 to 50%. In this case, it continued and then it passed through the previous day low as well. This is the time it is breaching the short, I think this is 10-day moving average and this is 20-day moving average. You should get out completely. Why? Because your thesis of breaking out from this point has failed. Can it go back? Yes, it can go back. Anything is possible, but the chances of it going back immediately are very less. Now, what would have happened had you carried on with the position? The first point of break was this, second was this, complete exit, but you hold on to it. Then it would reach the next line of defense, which was 50-day, and then it came into a downward trend. So from the 52, it all came down to 40 and onwards. So if you do not take your action right here at this point or maximum 8 to 10% point, then you will find yourself stuck. And the latest example, for example, are the stocks like SMCI or uh, HIMS. They showed this kind of failed breakout behavior, and people were holding on to those stocks with expectations and hope that eventually this will fight back and come back, only to find it drifting downwards and downwards and downwards. Will it come back? Nobody knows. Eventually, one day it might on news or some new business opportunities or new business venture, it might. But why you should wait for those 4 or 5 months? Why not just close it within 3, 5, 8% or 10% and move this to a better performing stocks, which is in a kind of a trend like this on this side of your moving averages rather than on this side of your moving averages. This is basic common sense. But unfortunately, we are, because of the financial losses and we don't understand the structure of the charts, we get stuck in that, and then we hold on to position in the better in expectation and hoping for the better times. Okay, selling into strength. So someone asked me about AMD. We will give an example of AMD on this as well. Selling into strength, why it works. When the stocks are moving up and you have good positions, and it's like SanDisk and MU and AMD these days, they're going crazy. Every day they're increasing. But they are getting extended far away from their basis and moving averages. And the time will come that heavy profit taking will kick in and they will reverse sharply. So instead of chasing those stocks at high, we should start taking and trimming our position and take 15 to 20% gain on the most stocks in the very initial stages. Let the leader run. And then we should plan partial sales but reactive full exits. So taking some profit while it is going up removes the emotional pressure. And believe you me, emotional pressures are probably the single most forced to fight with when it comes to trading. It also prevents capitulation at the lows after reversal, because capitulation means something happening like this. It starts capitulating, coming down and down and down, while you were hoping the same action to persist, which eventually did not work out. So, for example, this is the case of SanDisk, very relevant, a new case, very up to date. So SanDisk came out of this entry point here. A very strong stuff. We entered here, we make a position around, let's say, $290 early in the January. Very strong position. It again consolidated. Now it's time to take some partial profits. Fine. We might take one third off. So we have some money in our pocket. And when it broke out again, still, then we can add some positions. But we have already made a good amount of money in this from this stock. And this is what we were looking for. But then for some time, it did not do anything because of the market coming under pressure, because of the Middle East conflict. But again, so what should we do? Should we just hold on? Once it breached this line, excuse me, 20-day EMA, we can completely close our position. We still made a hell lot of money from 280 to 600, more than 100% in 2 months. And then we can wait for better time. So it came further, it moved up, but our entry point either should be this line or that line. It's on the pullback with a stop loss below this or this. We again made an entry here. And again, this was successful. We were something around 750, 740, and now we are 1100. Now, is this a time to make another entry? Because I receive requests from people every day. Is it around a buy point? No, it's not around a buy point. Buy point was around this when it's coming out of base. Buy point was around this when it's coming out of slice. Although very small consolidation, and it was in a green. Now we are maybe towards the end of this green. Every good thing one day will have to end. And this green zone is strong, TR buy zone will end. So same will happen with Sundays. Now, let's say I enter here, right here at this position today. What is going to be my stop loss? Either this line or this line. It is too large a stop loss, $200 or maybe $100. So what should I be aiming for? $300 move towards upside. Can it happen? Yes, everything is possible. It can happen. We can miss that bus. We can miss that opportunity. But we have already covered this opportunity. So let's not be greedy. And eventually, when it's moving like this is a climax stop. It will come down sharply. Just in the case of, I will show you another example of climax stop. And it's a strong stroke, no doubt. But it can enter into this kind of a consolidation phase for many months. Because nothing can go up forever in this direction. Eventually, it will come to this situation or a reverse direction as well. So this leads to another concept of climax stop indicators. So I have a few requests. Shahab has requested for SPY, and one request I have. Yeah, the same analysis work with investing in ETF. It's not for only stocks, but ETF generally are not so volatile like individual stocks like Sandisk because the risk of the ETF is spread over a number of different stocks. So one movement in one stock does not pull the ETF in one direction so heavily. So that's the advantage of ETF. So how to identify climax stop and get out of there? When you encounter, you mean stock encounters, 25 to 50% move in 3 weeks or less. That's a tremendous gain or loss in one direction. 3 weeks or less, the price increase by 50%. It happens. I will show you some example. This is known as exhaustion gaps. Then eventually the buyers get exhausted, and then they start taking profits. And when the profit kicks in, a situation changes, then the reverse direction is also although it's 50% move in 3 weeks in one direction, it will be 50% in the 3 weeks in the other direction as well. And many triggers can cause this: a stock split, largest daily price run up for the move. I mean, you have an ATR, average trading day for a stock. Let's say it's moved $14, but all of a sudden you encounter $28 or $50 move in one direction. That's a signal for the climax stop. And especially if you're too extended from your moving average line. For example, if you're 100% above the 200-day moving average line, normally the stocks do not live around that place. It will have to come down. Either the EMA line will catch up with the price, or the price will come down to catch up with the EMA line. Or there are 7 out of 8 days up in a row. That's another sign of if a stock is continuously the last 8 days going up, 7 are positive, only one was either down or not, then it's a signal for climax stop. So the timing trigger is once a vertical stock breaks the 10-day moving average, it can be down 20% within days. The window is narrow. So if you are well above 10-day line, then it's time for a climax stop. Just wait for it. And it has happened a number of times, it will happen again. So for example, this is car, average budget. Just a few days ago, it had not 8 days, it might have had 9, 10, 12, 15 days. This is a climax stop. Your entry was right here when this green zone starts. That's the right entry. You would have been lucky, right? But all of a sudden, this was more than this is your a 10-day and you are already 20% up or This is 200-day line. You're more than 100% up from. This is the time, as I mentioned earlier, to go back. And when it will go back, it will be very brutal. In one day, this engulfing candle, something went down from 840 to 400, 440, which was around 60% of loss in one day. And that's huge. So you should have taken profit here or near here. Do not wait for this action to come down because it will take away all the residual profit that you have made from your pocket. And if not here, you miss that signal, then breach of this line was another signal. And right now we are back to the 200-day line. This is classic climax stop. And it will happen again and again and whenever you see this kind of a climax stop movement in any stock. Because you are too far away from your means, and this is illogical in stock to move on to like that. Either it will consolidate, strong stock will consolidate here. This is in this case, the fundamentals was not there. It moved on because of some hypes or because of some other thing, but eventually it failed. Okay. We will, so I explained the example of the peak in real time, and then we will move on to the key moving averages philosophy. But before that, someone is asking about a few charts. One was asking about Sophie. This is not the time to look for the stock like Sophie. This is a monthly chart. I can tell you that it's in a strong downward trend, and we have to go to the daily time frame. This is how it looks like. This is not the right time to go into the Sophie. Simple as that. But where was the sell signal? Our topic is sell signal. Sell signal was when this zone started, it started coming from here, this, and if not this, then this. You are in a sell signal zone. You have breached this important 50-day, and you are working under the 50-day line. This is not the time to be remain in that particular stock. Even if you were there or you entered here, chances are much higher it will go down, which it did. And instead of, let's say you were at 27.19 and then you went out around 26 and 25, that would have been within 5-10% of loss. But right now, if you is 16%, it's 40% or 50%, even more than that, 50 or 60% loss. You don't want to get trapped into this kind of situation. Okay. One quick question was about shop, then we'll move on because we cannot entertain all the stocks here. Nothing here. This is a daily stock. This is giving you some signal, but this is too early. And it takes time, but it's trying to rebuild. It's trying to repair this. Unless this situation changes and you are on this kind of a trend on your left side, then this is not a stock. I mean, this could turn obviously, but it will face resistance right here, right here, right here. And it will take some time to slowly develop and come out of this thing. Okay. So moving back to our sell signal presentations. The next sell signal is breaching the key moving average philosophy, which I have explained, 20-day and 50-day. When you are above the 9 and 10 and 50-day averages, you are strong, the stock is strong, and they deserve patience. They could be brief pauses, but they are healthy after sharp runs. Do not sell under normal consolidation. Normal consolidation means that you still above the 50 or 200-day line. This could be a very normal consolidation, and even very healthy stocks go under this consolidation, and which is very normal for them, and which is good overall because they form bases. But a decisive break of these key lines, especially with high volumes, confirm a breakdown and give a sell signal. Volume confirmation matters, especially critical vertical movers. So, like in case of Avis car budget, there was a high volume whenever it came down. Want to take a look at that? Take a look at this volume. Something like here. It came down, and what kind of volumes? So there's nothing left in this stock. It means that everyone was trying to get out of this. Maybe the trading was halted number of times, and it will continue. It's just trying to find some support here, unless there's something fundamentally changes about this stock. In this case, probably won't. So do not fight with this kind of trend, a broken trend, because you cannot fight the trend. If you have, like this is shop, if you are stuck here, this trend will probably take away all of your money. I don't know what is EcoStar. I have never seen into that, but I can tell you that it's not a very solid stock as far as I know. No, I take that back. Right now, it's not that bad. It's on a good side. Maybe it's trying to come out, and it may be a good entry, but we're not talking about entries here. We're talking about selling strategies here. So right now, there's no selling point. It might be an entry for the EcoStar. So going back to our mm, key theme, which was uh, recognizing selling signals. So breaching key uh, moving averages is another moving averages are another selling signal which we should understand. So some examples here. This example is from Poet, POET. So Poet made a breakout here, green zone start. If we make an entry, but here it started breaking down. First moving average was actually it lost here. If you are too convinced about the stock, you can give it some room, for example, but you should have already taken some profit when it came down because it moved from 670 to 710 and 720, which is more than 10%. And you should not give it room to go back and give you losses here. You should cut down at max at zero break-even level. Because what happened next? Once it moved down below these moving averages, it never, not necessarily never, but for at least 2 or 3 months, it on this chart, it did not recover. And then it started again falling down all the way to this level, and now it has moved back. But again, it broke down on this level. So this is a very choppy action. And do you want to get stuck in this kind of stock? Obviously not. Let's say you again tried your luck here and you made a 10% move, but you came down here. Should you get out? Yes, immediately. You should not let this stock going back and give you start losses. Forget about that thing. Even if it goes back, just forget about it. But you see what it happened? Because it was not showing a proper breakout structure. And when it breached this line again and this particular 200-day line, it again had a huge gap down on a huge volume. It means the chart is broken and the stock is broken. It will take a long time, maybe another few months, to repair itself and establish another trend. All right. So this was one example, and this is Microsoft chart. For example, let's say not last November, no, November 2023, you made an entry when the green zone started, came out of this base. The strong green zone start, that's according to our TR strategy, that's an entry, especially in the case of Microsoft. So we made an entry, and that was a very successful entry. Now, do you exit here? Depends upon your conviction in Microsoft. You give it a chance. You say, okay, I can sustain. I have a 15% margin here, so I will sustain. And it eventually worked. It worked. It moved on. But here it again break, and then it started consolidation. Now it's your call. It broke this 50-day line, then eventually 50-day line, 20-day line. You want to give it a chance? It's Microsoft. Maybe you have strong conviction. Give it some chance. But under no circumstances, when it comes and started this strong zone here, you should further carry it. First of all, for last whole year, it did not do anything. If you were carrying your position from here. Number two, you have started a strong sell zone. Number three, it has started moving averages, breaching of moving averages, and you should get out. It again gave us entry here, but sometime around November last year, this was his first sell signal when this buy point and this entire zone, this it breached these moving averages, and then it tried to consolidate and again breach these moving averages. If you had not taken a position exit here, then was the time you should have close it. Don't worry about whether it's Microsoft or not, because the entire software group was out of favor. And it was not the group was not supporting the Microsoft was not supporting group. And eventually you see it came down from 470 to 360. And this is where we made another bold call when it's trying to move out. We said, okay, we may be finding a double bottom, let's try. And so far it's working, but it is still weak. It has overhead resistance here, and maybe this is my selling point. If I have holding a position from the bottom here, this is going to be my selling point, this or this. I will not carry it forward to this position for the time being because Microsoft for the time being is no longer a long-term stock. It's under pressure and the group is under pressure unless it recovers. Okay. Another selling strategy going back to our first slide was channel right here, channel violation. So the channel violation, what it simply means, normally this is ConocoPhillips. So the ConocoPhillips having its head office right here in Houston. When the energy sector broke out early 2026 after Venezuela news in January, all stocks starts firing on their all engines, and it established a good channel. Now we are recognizing this is kind of a channel. As long as this is not breaching this channel, not starting breaching and a main keep moving like this blue line, we can hold this thing. But eventually, in April, it broke down, and it's a huge break here, breaching this line and broke down. Now the channel is closed. It has come out of this channel. It means what can we expect from ConocoPhillips? We should expect a consolidation phase at least before establishing another downward or upward move. So this was your time. If you were carrying a position from here and you had not taken profit so far, this was your time to get out, and the stock gave you some good opportunities. Okay. I know what is Williams Energy showing. I'm not clear about Williams Energy is a company or Williams Energy is an indicator. Not sure about that question. So channels violation, you should understand the channel give you indication whether the consolidation phase is starting, especially this break. This break is critical. William Energy will see that if time allows, because we have another presentation by Brother Junaid and 15 minutes. I want to close it before that. So trade your own game, match style, perfect head escape. That are you aggressive? You are there for just for intraday signals, day trading or futures. Are you swing? Then you should wait for the closing confirmation of that particular day. For the long term, you should use weekly chart, 10-week line. Mental health selling means that you should make some profit along the way so that your stress levels goes down, especially during the earning season, which can have a swing in any direction. So for your health, mental health, the selling is also important and recognizing selling signals. So those were the key takeaways that we should combine signal. No one signal is perfect. We should scale out along the way, take partial profit, reduce size and set alerts for them. Sometimes it is urgent, like a gap breakdown in terms of ConocoPhillips, for example. And then you have to match the urgency of the signal to the quality of the holding. If it is a long-term stock, like we discussed, Nvidia, Apple, and for that matter, Google as well, then our criteria could shift and change. Accordingly, we should grade our stocks. We should know the cushion that mostly, in my case, is just 8 to 10%, and we act with discipline. Except for the very long-term stocks, we give them more advantage. And as I said, we kept losses at 8 to 10% and let our winners run. So we trade the rules, not the news. Okay. So that's pretty much it from my side. I have a request on the Williams Energy. Let's see if I have time. Williams Energy, what does it say? Williams Energy. I think it's Williams Companies. WMB. Yeah. Okay, it's not William Energy. So William Energy right now, again, I mean, there's no sell signal for the time being at least, but I see a gap broke out. Or it started. It's trying to test its previous high, and knowing the behavior of the energy company, I don't think that has a high reward to risk trade right here. So when it comes down, it will try to close this break or come to this level. That could be another entry. But we are not talking about entries here. We're talking about sell signals here. Right now, there is no sell signal here on this particular chart. Okay, so thank you very much, guys. If you like this presentation and you like this product, if you want to know more about our product services, so we on our website, which is the address is here, and livestocks.net, we have a weekly commentary and stock pick services, which is just $10 a month. It gives you our weekly expert stock picks, hand-picked stocks, and with the market commentary and analysis. And it delivers you almost every Sunday or Saturday. There's no software needed for that. If you want to analyze the software yourself, which is an AI powered, based on AI system, news sentiment analysis, the TR system, the trend recognition system, the charting, automatic pattern detection, stock screeners, back testing, then it's $25 a month, or with a discount for annual basis to $275 a year. The old classic version of the same software for Excel, which is Microsoft Excel based version, is $140, and it comes free with this. Both of these come with free with this $275 a year package. Recently, we have launched this TradingView version of our TR indicator, mainly used for day trading indicator. But because TradingView, I showed many examples of this TradingView. TradingView itself is an excellent trading platform. It has very good professional charting capabilities. So this is equally good to analyze stocks on monthly and weekly time frame as well. So you want to see the trading TR indicator chart and make this is absolutely a must go tool for the. It comes with the day trading day trades, and day trading indicator comes with $20 per month along with a daily email for the pre-market liquid moving stocks. You can combine with the day trading indicator with the main software either in the monthly basis or the yearly basis. Monthly basis is if you just add up, instead of $20, it will be $16 per month. And so if you add up for 25 and 16, it means $41 a month. Weekly commentary covers sell picks too. Yes, those picks which are in our weekly commentary, like here, the commentary will also tell, and during the week as well, through our social media, there is time to sell, and it's flashing a sell signal to get out of those stocks. And the best package is that if you find a stock analysis, you get this $275 a year, you can get 50% discount on annual for this day trading indicator, and you can just add it to $120 for that. All right. For any questions, you can through email. This is my email, support@analyzestocks.net, or through our website is form. Excuse me. You can always drop an email or send a message to us. This is the TradingView indicator which was developed for day trading, but actually it works very well on the long-term analysis as well, because you can very quickly plot the TR indicator for the weekly and monthly time frame, and even on yearly time frame for the long-term traders. All right. You had a question, please show the day trading indicator on the TradingView. This is the day trading indicator on the TradingView. This is the TradingView. And this is the day trading indicator. All you need to do is change the from month to day, 1 day or 15 minutes. So you can see the same indicator for 1 minute, 2 minute, 3 minute, 5 minute trading farm. Okay. If one who has no position, Zishan, in my latest weekly commentary, I have some commentary and some long-term stocks, and there are some which are showing good entry points from right now. Just read the weekly commentary which was published yesterday. All right, guys, if no more questions, thank you very much. I appreciate all my customers, all those people who have uh, taken some time out and who have to see this presentation. Hope this will help you. Selling is a difficult job. It's not easy job. It takes emotional toll, psychologically, it's difficult. Sometimes you sell too early, sometimes you sell too late, sometimes you incur losses. But I hope that understanding the logic behind this and developing your strategies, understanding the technicals behind this selling strategy, and identifying the selling signal will help you improve your trading results a lot. Okay, any more questions? I can take one more question if anyone has any further questions. Someone was asking about Shopify. If I think it was Fawad, if he is there, let's take a look at Shopify. This is TradingView, but for example, Shopify was this shop. So this is Shopify, and this is a daily chart. And I think I can discuss that. but it's still under pressure. It's not come out of this consolidation. It's working inside this range. Anytime it will go down here and here, it might find a good base again, only to come back and fight this resistance here. For me, I would like to be in this side of kind of a with the green zones, not the red zones, and this kind of coming out of this power zone or the base here. This is what I will be looking for. All guys, thank you very much. Trading setting up similar charts on TradingView is difficult, not showing same info. Masood, you need to probably catch me offline with that. I can help you in setting up the chart. Chart setting is on TradingView. I understand there are challenges because there are too many things, too many parameters and indicators to set. And I might, when I look into it, I might develop a layout and share it with you guys. So whoever wants to just drop your email into this chat box that I want to, and if I develop a layout, I can share this layout with those guys on TradingView. But you need to have a TradingView username for that, an account with that TradingView. Just drop me a private message on the chat, and I will follow up. Okay, I will share that those layouts with you. My TradingView layouts. There are two or three only. All right, thank you very much. Appreciate your time. Have a good weekend, and hope to see you very soon. And by the way, next week we are going to Dallas. I have a booth in their Ummat Expo in Dallas. And on Memorial Weekend, we will have going to the ICNA convention in Baltimore. And we will have, inshallah, stall there as well. So hope to see you soon. Thank you very much.